can you pay your kids to do work in your business and pay taxes on it? Well, that's certainly a question I get a lot, and it's a strategy that is out there for sure, and there is a real strategy behind it. And so I'll talk about what that is and how to actually do it properly here in this video. Paying your kids is definitely something you can do. I mean, you can pay anybody, but your kids especially, because you're keeping it in the family, becomes this big tax strategy that a lot of people want to take advantage of. But you have to do it properly in order to get the deduction, get the proper deduction for it, and certainly stand up to a IRS audit if you were to be audited for it. So what does it really look like? Well, when you pay your kids, what you're doing is you're actually creating an expense on your business. So it reduces your taxable income on your tax return. So whatever your highest tax rate, or we call the marginal tax rate, whatever that is, say it's 30%, then 30% of every dollar you're paying your kids, you're reducing your taxes by that much. Now, remember, you're paying your kids, so that money does have to actually transfer and move from your business account to an account in the name of the child. Now, you can be the custodian of it for sure if they're younger and a minor child, but it needs to still be in their name. So you're going to spend $1 for every dollar. You're going to send $1 out, but you're saving 30 cents on that dollar. In my example of 30%, whatever your tax rate might be. So the business is still incurring an expense and saving money, but it's going to your child account and it's saving. And so they will not pay taxes on it up to the standard deduction, which is a little over $12,000 right now. But any money they earn up until that $12,000 or that standard deduction amount, it would be tax-free to your child. But again, remember, you got to pay your child. People miss that and think they can just pay their children and keep the money. The child actually has to keep the money, and there's some strategies to do to further benefit from this with that money, and I'll get into that in a moment. But to do it, but really the requirements are they actually have to work in the business, so they have to perform some business function within the business. And modeling on your social media account usually will not fly with the IRS unless you're hiring other models as well, or if you didn't have that child, you'd be hiring that model. But most people don't hire models for their business unless they're truly modeling clothing or things like that. But short of that, it's really a high bar to get over modeling. They really need to be doing some sort of administrative function, filing, shredding documents to start with the younger kids, making phone calls, sending emails, doing your social media management can even be one as they get older and they're more into social media than we are sometimes. So those are the kind of functions that they can do. So that's the first step. They actually have to perform a function. The second thing is whatever you're paying them has to be a reasonable salary for those jobs that they're doing. So as I mentioned, the $12,000 people throw out and would just pay them that, and it's zero tax for them. And that is true, but they have to do enough work to justify that $12,000. So just working a couple hours throughout the course of the year isn't going to be enough. They really have to have that. And so when the IRS comes in to actually document, what are they going to want? They're going to want some sort of timesheet. So you need to keep a timesheet or some sort of work log for your children to show what functions they did, how long they did those functions, and so to really kind of justify the work. And you really think about it, if you're hiring somebody that wasn't your child, an outside party to do that, you'd have something as well. So kind of come up with that same thing. Either you're going to have a timesheet, they're going to submit invoices to you, you're going to have just a contract saying I'm paying you X amount per week to do this function. You're going to have something, so you need that as well. And if you're paying them a regular wage, make sure that regular wage meets the functions that they're supposed to be doing, and you would pay somebody else to do as well. So just kind of keep it reasonable. Don't just pay them an exorbitant amount. because you can, because you're your parent, you're their parent. You have to, it has to be reasonable to justify all of that. So once you do that and you actually transfer the money in their account, that's how you get savings. You save on your taxes, on your business. Now you're paying more to your child, so your business cash flow is actually less in this scenario, but that money is going to your child account and they're not going to pay taxes on it. So overall, your family is saving in taxes, but you're shifting money from your business into your child. Now, to take it a step further and where this really turns into a really powerful tax savings is with your child now has what's called earned income. They're earning income from doing actual work. So they have earned income, which is a requirement then to put money into an IRA. So they can turn around and take their earnings, or you can for them, and put it into a Roth IRA, in particular, in the name of your child. So they will able to invest into a Roth IRA, and if you have real young children you're starting it out with, that money goes in, and what's great about a Roth IRA is you put the money in after taxes. Now in their scenario, their taxes rate is 0, so it's still after taxes, they're just not paying any taxes. So they get to put in all that they earn into this Roth IRA. They don't get a tax deduction, but they don't need one because they're not paying taxes, right? And while that money's in there for, 50, 60 years, depending on how early you start this, that money's going to grow tax-free. It's going to earn interest, it's going to earn dividends, capital gains if you're investing in stocks and things. However you're investing it, it's going to potentially earn and grow money, and you're not going to pay taxes on it as it earns and grows that money. When they reach retirement age, they get to pull that money out, and the beauty of Roth IRAs, because it went in after tax, it comes out tax-free, including all the earnings. Not just what you put in, but what you put in and all the earnings comes out tax-free. So you think about how much something can earn over that long a period of time, and to be able to take it out and not pay any taxes on it, that's where the real benefit of paying your children comes into play, is planning for their long-term future and setting them up with a great nest egg to retire on tax-free from your savings. So that's really the ultimate power, but in the short term, you're saving some money on your taxes, but again, you have to put the money, and that money has to go to the kids, so your cash flow in your business is going to decrease by the full amount you're paying them. Now you're getting the benefit of the tax savings, but that has to occur or you don't get the deduction. If you don't pay your children, they can work all you want, but you're not going to get the deduction. And if you pay them a salary too high for what they're actually doing, the IRS could come in and say, nope, that's too high, you don't get that full deduction, and increase your taxes and assess interest and penalties as well. So hope that clears it up, and I hope that was helpful. If you have any questions on paying your kids, leave them in the comments below. Otherwise, thank you for watching.